goodies. Did you bring some stuff?
I just looked up what's going on. I mean, the market is so different. Oh my God. It's,
Okay, that's something to talk about.
It's not good. I mean, it's just, it's the same. I mean, it's the same. It's just a changing market more toward buyers. The owner market. I mean, I have my own house in Ross. I had it on last year had it rented for $10,000. I showed it last year 5 times in an hour. 2 people wanted it at $10,000. I reduced it to $6,900 today. It's been 4 months.
Wow.
Yes, wow, that's a vivid example. Yeah.
Wow, okay, that's something to talk about.
No, I don't know if I want to say that person.
No,
I can say
you
a client.
just-
No, I don't even know if I want to get that word out. But the market has changed.
Gotcha.
The market has changed.
Just, yeah.
Well, actually, maybe I want to say that because then I'll rent it.
That's a good point. Yeah, just to say I have a listing.
Yeah.
You know, that the person, the owner was getting such a
Yeah.
Okay. You guys ready?
Yeah. Good to go.
All right.
I'm so excited. Life
So what did you say? I'm sorry. Did you say you had something you wanted to lead in with?
Well, let's see.
If you don't, I have plenty, and we can just.
Yeah,
bounce it
sorry.
around.
I always do. Yeah, go ahead.
Okay.
Like home ownership rate is down, lower than it has been in I think since 1967.
63%.
You know, the millennials are buying. Annual income is like the strongest it's been, 50-year high. Anyway.
The computer just decided to crash on me. Okay.
So, by the way,
Yeah, go check.
Alexandra, that
Yeah.
working out. I saw the thing with her.
Yeah,
She's so nice.
yeah. She's good. She knows her stuff.
She's brilliant.
Yeah.
All integrity, no
Yeah.
hype.
No,
Real as they
she's
come.
not a high pressure person. Whatever. She's
Good.
a decent person.
Yeah.
Yeah, because I mean, Lou's a really nice guy, and he does good radio. It's just he's not consistent.
Who?
Lou.
Oh, Lou.
You know,
yeah.
just
Oh,
like,
right,
I
because
can't
he
do it this
starts to
month,
read.
Yeah.
Oh,
and-
you can't have that.
No, I needed someone who could be consistent.
Oh, she is. Steady Eddie.
There you go. I think she enjoyed being on it, so which is good. Oh, we're okay. You guys ready?
Yes.
All right, here we go. Get your headset on there, Sporto.
Yeah, just.
Do we have questions too?
Oh yes, I'm sorry. So Patty, I'm told the market is changing. Does that mean it's not a good time to sell?
Oh, I gave you that. I forgot.
You gave that one, right? And Mark, do you always originate loans, or do you ever purchase existing notes? Purchase present funds.
And that question will lead right into the stuff that I have.
Okay.
Yeah. It's all the same. It all leads into the other.
We can always start off with email time too.
No. I've got a good article here
Yeah,
about San
I don't like to
Francisco.
lead in with email time anyway.
Yeah.
All right, here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. I'm proud to have as my co-host Mark Hahn of Pacific Private Money, one of California's fastest-growing mortgage investment firms, and Patti Cohen of Pacific Union International. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 tanning certificates given away during this show. And those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin, and they have a special service where it actually gets rid of the wrinkles. Can you believe that?
Spray on wrinkle remover?
No, not spray on. No, this one's like a specialized type of tanning bed that gets rid of the wrinkles. You got to check them out. I know, it's pretty amazing. So these certificates are actually worth quite a bit. All right, also check out our paintball ticket icon, because they make great birthday and holiday gifts. We have the holidays coming up here pretty soon. All right, you get over 80% off by clicking on our paintball website. Go to bestinvesting.com. Check on the paintball. All right. Today's trivia theme is going to be sports. All right, and Mark, go ahead. You got a lot of good stuff for us.
We do. I've got some real estate stuff here, and we got Patti Cohen of Pacific Union, and me, I'm Mark Hahn from Pacific Private Money, a real estate lender. And so I spent a good part of this week, scouring, the usual blogs I like to read, and I probably, skimmed about 100 different articles, looking for ones that catch my eye, that are interesting. And of course, this headline I found very interesting. I gotta read this one. It actually has some really good nuggets in here. San Francisco's real estate market has reached peak unaffordability. How's that for a headline? So this was an interview of the chief economist for Trulia. And of course, these guys are a big firm, and chief economist for a company like that obviously is probably pretty smart.
Owned by Zillow.
Yes,
So, yeah.
absolutely. The article talks about for the San Francisco Bay Area residents long accustomed to skyrocketing rents and real estate prices, there's some relief on the horizon. Well, I would disagree with that statement right out. There's been already quite a bit of relief because we've seen the rate of appreciation has dropped quite a bit. So in fact, we are now at the year-over-year rate of appreciation in the San Francisco Bay Area where we were all the way back in June of 2012. So we're at a 5 to 6% appreciation rate right now,
I mean,
and
that's pretty healthy though.
It's very
it's
healthy.
very healthy. It's down. Get this. It's down from a high, and this is according to the Case-Shiller Home Price Year-over-Year Index. I'm looking at a graph right now. In 2013, it spiked at 25% year-over-year increase. So now it's slowed down to about 5. So
That was a great ride.
So he calls it peak unaffordability, and so while single-digit growth in any other part of the United States would still be viewed as a significant uptick, it's a significant downward trend in the San Francisco Bay Area. And here's some great statistics. I just love this. If you look over the last 30 years at the largest markets in the United States, and you look at prices, the two markets that have seen the biggest increase over the last 30 years have been San Francisco and San Jose. If you're a homeowner, they give an example here. It's kind of a story example, which I thought was kind of interesting. If you're a homeowner and if you bought the median-priced home in San Francisco 30 years ago, and you just finished paying off your mortgage, you'd have gained nearly $1 million in value. And in San Jose, similarly, it's about $750,000. And what makes that so astounding is when you compare it to Fort Worth, Texas, or Dayton, Ohio, or they here mention here also St. Louis, Missouri, or Chicago, Illinois. If you bought a home in any one of those places in 1986 and just paid it off, you'd only have gained about $50,000.
Is that right?
Over
Yeah.
30 years.
Nothing beats the Bay Area.
And I love this line. You wouldn't be incorrect to say that the San Francisco Bay Area is weird. I think it's the first time I've ever heard the real estate market in the San Francisco Bay Area described as weird. San Francisco alone has gained more if you had bought a median-priced home than the 10 slowest growing markets in the last 30 years combined. So we're definitely an outlier here. But the good news is we're in a market that Patti has said several times over the last several shows that we're in a normalization mode with year over year that really is way more sustainable, and that's good news. Now, a couple of other articles I thought were interesting. I love articles that contradict each other. So here is Deutsche Bank is reporting that they believe the U.S. economy is on a weaker footing, and that falling corporate margins, weakness in the U.S. labor market, and rising corporate default rates foretell a recession. And they have raised their estimate of, or probability that is, of a recession, a U.S. recession in the next 12 months to 30%.
Oh, wow. And then they're also talking about raising interest rates. Wouldn't that kind of be not the thing to do?
Well, it's interesting that this compares with a Bloomberg survey of economists that only 20% of which are predicting a recession in the next 12 months. So, well, here's another article that says, "Nuh-uh, economic growth is on the upswing." And this is from Fannie Mae's Economic and Strategy Research based right here in the good old US of A. And they say the economic growth is on the upswing with only a few emerging soft spots. In fact, they say economic growth is poised to accelerate 2.6% in the second half, a rebound from a lackluster growth of 1% in the first half. And that's thanks to consumer and government spending, which is expected to drive growth. So who do you believe? Are you a pessimist or are you an optimist? More when we come back.
More when we come back. Okay, here's our first trivia question.
Oh,
We're talking sports here. Which team won the 1919 World Series against the White Sox, i.e. the Black Sox scandal? You remember, when 8 Men Out, the movie, and Shoeless Joe Jackson and all that? The first caller with the correct answer is going to win that certificate, Tan Bella, for 3 tanning services. Call 888-912-1190 to answer that question. Which team won the 1919 World Series against the White Sox? All right? Don't touch that dial. The best of investing will be right back.
Patty knows that answer.
You know,
No.
Oh.
you weren't around
You're
back
like,
then.
remember in 1919? I'm like, no, I don't.
I love it when I see. I mean, these were literally from the same week.
Oh, it's ridiculous. I know.
Nobody knows what's going on.
I know.
Yeah, but if they raise
Which is probably good.
That'd be the smartest thing.
Well, I've actually got the article in the Wall Street today about that.
Okay.
Is actually really good news. They've lowered their expectations for rate hikes in the years ahead,
Good.
Really? Okay, that's important.
and
Good.
say they're teed up for a likely move in 2016. But there's 3 members of the FOMC that do not want to see any rate hikes this year. They've
Good.
gone public with that.
Good.
In
Sounds
fact,
pretty good.
in fact, basically, I highlighted this which is really all of this stuff. Gobbledygook is kind of boring. In the years ahead, the committee sees 2 hikes in 2017 and 3 each in 2018 and 2019, which would bring the funds rate to about 2.6, assuming that each increase would come in at quarter-point increments. So, again, it's kind of hard to see that far ahead, but that's still pretty low. Federal funds rate at 2.6, you're still talking about maybe 5%. 5.5%.
How do you want me to lead in with, just tell us about interest rates?
Let me continue on with just
Okay.
the conflicting reports. Maybe we just kind of talk about, maybe it's good news that there's disagreement because there isn't anything like no one agrees that there's
It's always
clouds
like
on the
that.
horizon.
I mean, it's always like that. Remember when they were predicting the bubble of going down 30% and nobody bought it? What was that? A movie, anyway. That was how it all happened.
yeah,
It's
that's right.
always like that. You'll never find consistency.
Oh, I still haven't watched that yet. What's it called?
Big Short?
Big Short.
Yeah,
Yeah,
that's
Big
good.
Short.
Fantastic.
It's very good, very accurate too.
Yeah.
Okay, ready?
All right.
Here we go.
Focus.
Welcome back to the Best of Investing. Edward Brown here, along with Mark Hahn and Patty Cohen. First trivia question: which team won the 1919 World Series against the evil Black Sox during the scandal?
Red Sox.
No, close.
White Sox.
No, the Cincinnati Reds.
Oh.
The Reds, not the Red
Yeah,
Sox.
not the Red Sox.
Oh.
They would have been in the same league. Okay, so real quickly here, before we get back to Mark here, want to give a little plug here for the Hilton San Francisco Hotel, which is in Union Square, so located in the heart of San Francisco's vibrant Union Square district. The Hilton San Francisco Union Square is home to the newly opened Cityscape Lounge. So they're on the 46th floor, 360 degrees of views from atop the 46th floor. Check them out at HiltonSanFranciscoHotel.com. Mark, take it away.
So we ended the last segment talking about how a report from Deutsche Bank increased their prediction for the probability of a recession in the next 12 months from 20 to 30%. And yet Fannie Mae's economic reports says that growth is currently on an upswing and that all signs look good into the near future, and they're not calling for a recession. So I just find it interesting that there never seems to be any real agreement as to what's happening in the economy. And of course, off the air, Patty, we were talking about how back in 2006, happy days were still here, and very few people were calling for that. So really, there's just not a lot of agreement, and I guess that's for me that's not a bad thing. I know here in California, California-based economists remain pretty bullish. We've got good job growth going on, and of course, job growth is one of the primary drivers for continued strength in real estate prices. We're also seeing less froth in the San Francisco Bay Area real estate markets as the year-over-year appreciation rate is now at what I consider a pretty sustainable 5 to 6%. And are there some, potential bubble areas in real estate? Maybe in the Silicon Valley. We're getting loan requests for some pretty wild prices per square foot in Menlo Park, Mountain View, Palo Alto, areas like that. Those are definitely outliers, and those are clearly just driven by high wages and high net worth individuals taking advantage of their stock options and willing to pay whatever it takes to get the house of their choice. But for the remainder of the real estate Bay Area real estate market, people ask me all the time, when do you think the next cycle is going to hit and prices are going to go down? And I don't really know that they are. What does going down mean? It means maybe you don't get the price you wish or hope for in your house, but you're getting a fair price for it. And I think the market is still showing some pretty good signs of strength. Patty, what are you seeing in your marketplace? You're a specialist here in Marin County, which may also be kind of in its own little bubble in respect to the Bay Area or Northern California or California at large. But what's the trend right
Well,
now?
I am in touch with experts and agents all over the Bay Area, and I check in with the top agents, and I do a lot in Napa actually, but checking in with the East Bay, Peninsula, Silicon Valley, and Sonoma and Napa counties, as well as Marin and San Francisco. It's kind of a bipolar market, meaning that still a good percentage of properties go at or over asking. And at the same time, the days on the market are, on average, days on market are much, much higher. List price to sales price is narrowing, both in condos. Condos were super hot for the past year, and now that's changing. And the shift sort of started last year. And I think it's a very normal, natural shift that needs to occur. So if we look at what Mark said about the rate of appreciation, we've gone back to the same rate of appreciation that was happening in 2012. That was the beginning of things going on. And so we're back to that. So it's a nice wide swing. I mean, it was a wild ride up,
Yes,
but
it was.
we can't be taking that wild ride up because we don't want a hair-raising ride down. So at the same time, what we have is, when I say bipolar, there's a lot of properties that sit. And that always happens at the end of a cycle when sellers price their properties at the same rate of appreciation that they were expecting.
Got it. Double digits over
Yes.
last year, yes.
And buyers start pulling back because they start hearing about how things might be going to hell in a handbasket. So then we have the beginning of a changing market. So sellers that are aware of what the true value is today and price it accordingly will sell, and it will sell quickly. And it will sell closer at or over asking.
It's amazing how many times people try to just overprice it and think, oh, I'll just lower it. Just lower it.
Usually the opposite is a better strategy.
Yeah, like
Much
San
better.
Francisco.
Yeah,
Much
price
better.
it low, even the kind of, I hope I get multiple offers kind of pricing. I mean, we've been doing that with some flip properties that I'm involved with in the East Bay now, but that market is still so hot that you're right, Patty, that Berkeley and Oakland, West Oakland, Oakland Hills, they're seeing a lot of multiple offers, very strong market still. And
It's all about
San
price.
Francisco.
I mean, in a lower price range, you can do that still sometimes, but that strategy of pricing low, it will backfire these days.
Too low or low at all?
Well, you need to just price correctly. And I think, and it depends on the price range. Are we talking about 700,000? Are we talking about 7 million or 2 million?
Good point.
And where is it? And if it's unique in any way, in a negative sense, like a 2-bedroom, 1 bath or whatever, it's really important to get a local agent that knows
Or
what they're doing.
4-bedroom, no bath.
Yeah,
That's
exactly.
unique enough.
Yeah, with 74 steps up.
Yeah.
So Patty, does the realtor community at large still feel today that real estate is a good investment today?
Of course, right?
Well,
Yeah.
I don't know. I mean, I'm kind of asking because again, it's one thing. The face of CAR and NAR and realtor associations is it's never a bad time to buy
Right.
real estate, but certainly when clouds show on the horizon or there's a belief that something's going to happen, maybe quietly they're saying, well, if I were you, maybe I'd wait a little bit and maybe get a better price in a year. But
Well, no,
if that's
I don't hear so much about the doom and gloom of it. I just hear that it's going into a more normal market. We're shifting more toward the buyer's side, but in the perspective, everyone knows it was ridiculously slanted towards sellers,
Yeah.
and it was unsustainable. So it's not like I'm not seeing prices go down. I mean, here's speaking of articles. I mean, California is the fastest growing economy in the U.S. and it's tech based. And if you say California, we're talking Bay Area.
Yep.
Home ownership rates declined for the 9th straight year. So less people are buying. Millennials.
Hold that thought. We do
Okay.
have to get
We have to
to a
go.
quick one. Yeah.
We got so much.
Okay. Here, next trivia question. Who was the only football player to win the Heisman Trophy twice? In fact, he did it in consecutive years. Call 888-912-1190. First caller is going to win that free tanning certificate. All right? We'll be right back. Sorry, these are heartbreaks.
Yeah.
We actually went over a little bit, but
And I haven't been putting this on, so.
What happens when we go over?
well, they give us a little grace because sometimes we go just a tad under. So they're hard breaks, but they're not as hard
Next
as
one should
hard.
be a nice long one.
So it dips into the
actually,
sponsors.
9, 10.
time?
Yeah,
Well, this is the, is the next one?
that's 3 is 9, 10.
Yeah, last week, segment 3 was 8.
So this is.
Oh, it was 9:10 last week.
Yeah.
So it's 9:10?
Yeah, 9, 10, and then 9, 19, and then
Okay.
5, 10.
Got it, okay.
And then we could maybe go to the mail question.
Okay.
MALE. No.
Yeah, I know what you mean.
Never
What is it
figured that
about
one
that?
out.
Yeah, right.
No, but the mail question, then I talk a little bit about what's really going on, and then
Okay.
I'll mention my Ross house, maybe get that rented. I just have somebody email that said they want to see it. That's good.
Nice.
It's crazy. Okay.
Do you want
An
to just go right
annual-
into email, or is there something you want to
No,
finish
but I mean,
up?
because it's all kind of
It's all, yeah.
mixed together anyway. Yeah, U.S. annual income growth climbs to the 50-year high. Annual income growth. So the growth is the highest in 50 years. But this is what's interesting. It surprised me. We're still 1.6 below the pre-recession level of 2007 in income.
Wow.
It's crazy. Imagine if you had to work for the man. And I can't imagine that.
Making less than 10 years ago?
I
almost
just
10
get a
years
raise every time prices go up.
Yeah, really. Yeah, that's true. Yeah, but when prices go down, though, I mean,
Yeah, not pretty.
it's
Take a bigger share.
Kind of mentioned something about that on the air here. Let's see this. Welcome back to the Best of Investing. Edward Brown here, along with Mark Hunt and Patti Cohen. Second commercial trivia question was: who was the only football player to win the Heisman Trophy twice, and he did it in consecutive years? Talking about 19, I think it's 74 and 75. If I'm not confused on that. Archie Griffin.
Ooh,
Yeah, remember him?
I do.
And then want to also make a quick mention here. Don't forget, October 29th, the Weingarten Children's Center in Redwood City, they're actually having a masquerade party, and it's going to be at the Hyatt Regency in Santa Clara starting at 5 p.m. So check them out at listenspeaklearn.org. Okay, and I think I'm going to be attending that event. Okay, so now, Patti, off the air we were talking about how, being a real estate agent, when prices increase, assuming it's all commission based, then you get a raise, and if it lowers, you get lower. The interesting thing is, like in the Silicon Valley, when the .com turned into the .bomb, the rates went down so low, the commercial brokers ended up making the charge of, instead of it being a typical, let's say 6%
Right.
commission.
They were taking scraps, like 0.25% for you. And
No, they don't.
No.
They were charging 9%. It was 6% to the procuring broker
Oh,
and
come
3% to. And the thing is, owners had no choice because there were 100 buildings to show, and you had to,
So if you wanted a buyer, and you wanted
or a
a
tenant.
buyer, right, a tenant. Oh, okay.
Yeah.
got it.
if you
Wow.
wanted to get in the game, you had to go with the cartel.
I know. Yeah. In fact, you hear stories about giving out iPads and drawings and big spreads just to get brokers to just come and look at your property.
Wow.
Pretty
Well,
amazing.
I think we're not, signs are not pointing in that direction just yet. And, we were talking, you used the term, you're not seeing doom and gloom. And I just want to say, I'm not hearing anything that approaches doom and gloom. All I'm hearing in the real estate circles that I'm working in is just caution.
Yeah.
It's just, look, we've been in an expansion now for 8 years. This is, now we're in, once again, and those of us that have been around for a few decades will remember we've had several fairly long peacetime expansions, as they tend to call it, in the last couple of decades, and this is rivaling all of them with 8 years. So we know the business cycle still exists. We didn't eliminate it. It's not like a new market like we were thinking about before the dot-com bust in the late 90s. But right now it looks like, if we do, that we could potentially have a business cycle recession that actually doesn't equate to a real estate cycle recession. Because again, California is just so unique with lack of housing and strong population growth and job growth that it's possible that the most we'll see in terms of a market shift will be a continued decrease in the rate of appreciation, maybe from 4 to 3 to 2, or maybe even flat, but not necessarily a price dip, and certainly nowhere near what we saw when the credit bubble burst in 2006.
Okay, so this leads right into our email time,
Thank you.
where we have an email from Patty. It says, "I'm told the market is changing." Must be listening to this radio show. Does that mean it is not a good time to sell?
Yeah, it's a really good question. I talk about conflicting information. I read an article recently that said there has never been a better time to buy. Now, there's commercial, there's investment, and there is, office like commercial, and then there's personal residence. So just speaking from personal residence, people buy and sell for many, many reasons. They get married, they get divorced, they have a baby, they
move,
empty nest.
get a job change.
Yeah, exactly. So it is a very good time to buy residential real estate because especially if you're moving up, it doesn't really matter because you're buying and you're selling.
So you'd sell at a higher price and buy it,
Yes, and the math doesn't change that much, but I still feel it's an extremely good time to sell because prices are not going down. They're not going up at the same rate. But where else do you get the government giving you a write-off on your mortgage?
Yeah. Well, here's the other thing: is if you do a big move up, as long as the interest rates are not too high, then increasing your mortgage is not going to change a huge amount over a 30-year period.
Exactly.
Well, and one of the most ridiculous statements I heard recently from a potential borrower was that he thought, well, maybe I'll just wait till next year to buy because I'll probably get a better price. And anybody who thinks they can time the market like that is really fooling themselves.
Oh yeah, a lot of people think that way. It's just ridiculous.
Yeah, they're just assuming the market is going to have a big decrease.
Yeah.
Or a decrease, period. And again, there's just really no indication that that's going to happen.
So, Patty, if people want to get more information from you, how do they get hold of you?
So I'm with Pacific Union International. It's Patti Cohn, C-O-H-N. You can look me up on Zillow and Trulia for reviews, and I am at 415-722-4842. 722-4842, Patti Cohn.
We'll also have you on the Best of Investing website if you just go there too. So, Mark, a question comes in, says, do you always originate loans or do you ever purchase existing notes? What are the pros and cons of both?
Well, that's a very specific question aimed at my company, Pacific Private Money, where we originate privately funded real estate loans. We're an alternative, non-bank source of real estate financing to the realtor and mortgage broker community for when they have a client that's maybe in a transaction that is in trouble. And even though that's a very small percentage of transactions overall, we're talking thousands of transactions in Northern California each week, and stuff happens. And bank financing is much harder to get nowadays than it used to be. And so a good, there is a significant percentage of transactions that require alternative financing in order to close. And so that's what we do. In addition to making loans to contractors and flippers, we make loans to consumers who are looking to buy a house. Maybe they don't want to sell, they want to buy first before they sell, and their bank tells them, no, you don't qualify for 2 bank loans simultaneously. That's an example for where we go in. And so that's our lending niche. And so the question was, do we always just originate loans or do we purchase loans as well? Well, we could purchase loans, but so far in our history of 8 years and 1,200 loans, we haven't needed to buy loans. And we do get offers from people, hey, would you be interested in buying a loan? In fact, if anything, we've actually sold a couple of loans out of our mortgage pool fund portfolio, which is now up to 70 loans. We can do that. So we actually can originate loans, we can sell loans, we could buy loans, but we're not really in the market companies who would buy loans would be ones that had so much capital and not enough deal flow that they wanted to put that capital to work. And there are companies like that out there, but fortunately for us at Pacific Private Money, our deal flow is really strong. What I mean by that is that our phone rings a lot, and we get a lot of loan scenarios because we market heavily to realtors and mortgage brokers and bankers and others who would know of a client that is in a situation where they could benefit from fast, reliable financing that is 10 times easier, if not 100 times easier to get than a conventional bank loan.
Well, and there's also certain risks associated with buying loans, isn't there?
Well,
You're not
yes.
the originator.
You're not the originator. When you buy a loan, the thing you can't do is go back to the borrower and ask them for a bunch of stuff. So that's really up to the originator. And I actually learned that in one of the few times that I did buy a loan. It's been some years, and I wanted to get information about the borrower and ask status, and the broker said absolutely not. Do not contact that person under any circumstances. And they were just adamant and livid that I even asked about it. So
I mean, they'll give you from their file.
right from their file, but
not
yeah,
your stuff.
that would be really odd for you to do
Wow.
that.
How
So.
can people get a hold of you?
So PacificPrivateMoney.com, PacificPrivateMoney.com for information on fast, friendly, and reliable alternative to bank financing for your real estate transaction.
All right, another trivia question here. Other than the Washington Nationals, name the only other current baseball team that has never made it to the World Series. Call 888-912-1190. If you're the first caller with the correct answer, you're going to win that free Tambella certificate. Stay with us. The Best of Investing. I'll be right back.
I cannot believe a tanning place says they'll get rid of wrinkles and keeps you
I know. Check them out, seriously. Right, yeah. No,
Usually they're a cause of wrinkles.
Yeah, well, yeah, no, it's they
Anything that still does that tanning stuff.
well, it's not. I mean, they got specialized. It's worth at least checking out.
Yeah.
You know. So Mark, I have for the thoughts for the day. You remember at the very end when I said, "Hey, Mark, does this smell like chloroform to you?" And then you go,
Oh yeah.
You go, "Oh, what?" Yeah, and then just silence, and then I'll take it from there. We haven't done that for a long time. You'll get a kick out of this one when we do the thoughts of the day.
So let's see. This next one's a long one.
It's also 919. Yeah.
And so maybe I'll start out with interest rates.
Okay.
Because we kind of talked about
Yeah, that's right.
strong job growth. We still have a net influx of people moving into California, despite the BS articles that you read. The facts are we have net immigration and we have net job growth, the strongest in the country. And interest rates, that's like the third thing. And they're going to stay low. It's going to be buying power.
We'll go right at that. Do you have any deal of the week?
No, but I'd love to talk about. I didn't bring this with me, but I read it and I knew I'd remember it. But this past week there were two articles, Wall Street Journal and CNBC, saying that a record amount of money is moving into real estate related funds and investments.
Okay. All right.
So
good.
I can say I can talk about.
Penny, do you do anything after the show? Because I have an extra ticket for the Santa Fe Chamber of Commerce.
Oh, that's nice. No, I did have plans.
Okay.
Yeah.
Yeah, it was a last minute thing. Okay, ready?
Yep.
Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hahn and Patti Cohen. Trivia question. Other than the Washington Nationals, name the only other current baseball team that has never made it to the World Series.
I never get these baseball ones. I'm not a baseball trivia person.
Seattle Mariners.
Oh, wow.
Oh,
They've never
really?
made it, and it's amazing because they won over 110 games in the 1990s with Junior. Mark, take it away. You got some interesting interest rate stuff.
Well, we're talking about the strength of the California real estate market. So we've got strong job growth in California, the strongest in the country, better than states like Texas, where you hear that so many people are supposedly moving to, where that's where all the real estate opportunity is. the fact of the matter is that you've got strong job growth in California, and also notwithstanding misleading media reports, we have net immigration into California. So you've got job growth, you've got population growth. The third component of a strong real estate market are interest rates, and in our case here, low interest rates. So what happened at the meeting this week of the Federal Open Market Committee, the Fed? Well, the Fed has left rates unchanged yet again, and in fact, they're tipping their hat a little bit, and they are basically lowering expectations for rate hikes in the years ahead. Excuse me. But they did talk about a very likely rate increase, or the likelihood, I should say, of one more rate increase this year in December. But what's interesting is there's now dissension in the Federal Open Market Committee. There's 3 members who do not want any rate hikes this year. But here's what I found interesting. Paragraph towards the end of this article. In the years ahead, the committee sees 2 rate hikes potentially in 2017 and 3 each in 2018 and 2019, which would bring the federal funds rate to about 2.6%, assuming that each increase would come in at quarter-point increments. So this is very, very conservative, and this portends continuing relatively low mortgage rates into the future. And so one of the fears that people that I speak with have is that mortgage rates would suddenly spike to, albeit historically normal rates of 5, 6, or 7%, but rates which over the last 10 years would be relatively high. So I just think that we're really looking at, there's a lot to be bullish about in the California real estate market. And like we talked about towards the end of the segment last time, I don't know that there's, I don't see any indicators, and I'm not hearing from California-based economists anything that would indicate that real estate prices are likely to dip at all, let alone precipitously, like they did 10 years ago in 2006.
No, the dynamics are so different. I mean, we had a propped up .com situation that was not sustainable, and we had lenders giving out money to anyone without checking. So that, no one's talking about that. But one thing that those dynamics are all positive, but one thing that we need to be really aware of in the Bay Area is that the percentage of millennials, homeownership percentage, has dropped to 21.2% since 2004 of millennials buying. There are new buyers. Now, in the Bay Area, we have the smallest percentage of millennials buying. So this, and we have an older population. So they move on, they die, or they whatever. So the millennials are coming up, and they're not buying in the Bay Area. It's not like they don't want to; they can't. So
no down payment, no percentage income.
Yeah.
Well, one area of the real estate market that looks like it might, I don't want to call it a bargain because you can't really use that term with real estate in the Bay Area, but you've got a lot of condos that are coming on the market in San Francisco proper in the next couple of years, and so the strength on the seller side is really going to weaken. It's there's a likelihood that there'll be a buyer's market in that area, and I wonder if that will attract some of the millennials and others who have put off making buying decisions because of maybe they're just not quite making the income, but with maybe some price competition among some of those high-rise condos that'll be releasing their units pretty
they're
soon.
still very, very pricey. I mean, if you think, we all know people in their 30s and early, most people, incomes have not kept up, and many millennials are choosing to leave the Bay Area, and that's exactly what people are not talking about, and that's exactly what's happening. So there will be some changing, but at the same time, the dynamics, strong growth, the strong job market, net low growth in housing, and net one of the most desirable places to live in the world. So and nice lending standards. So I don't see it going down at all, but it's a changing market, and the rentals market has changed considerably. We were talking earlier about this property I'm aware of in Ross, a nice Tony little community that was renting for $10,000 a month and was shown in an hour period to 5 people last year at this time, and 2 of them took it. 2 wanted it, 1 rented it at $10,000 a month. Today, it's been on the market 3 months and it's down to 60 to 50.
It's a bargain.
Yeah. What? I mean, that's a pretty substantial decrease. What do you think is?
Trying to figure it out. I mean, I am trying to figure it out, and in that kind of situation, it's only for people that absolutely have to be in that Ross school, and most of the people looking at it are not that. But at the same time, people are pulling back. A couple wants to relocate from the city, and they're like, no, we decided we're going to hang tough and do the commute. And the commute are so bad, like we live in Tiburon, and our son goes to Marin Catholic, and we can't take the commute anymore. We're going to hunker down and not move. There's a lot of people kind of rethinking things, but traffic in the Bay Area is, anyway, that's another story.
That's why I drive a motorcycle.
Well, just to go off on a
But
little.
if anyone's interested in that property, it's a very, very good deal. It's over half acre, gated, 3,000 square feet, gorgeous pool, totally landscaped, level lot in Ross for $68.50. Call me.
That's actually pretty cheap.
It's very. It is very.
Yeah. So.
So 415-722-4842, Patti Cone, Pacific Union.
You sure you want to say cheap?
Inexpensive. It's a bargain.
Bargain.
But I was going to say, tangentially to what we're talking about, it's interesting. It was reported in both the Wall Street Journal and CNBC this week that a record amount of money has shifted into real estate and real estate-related funds, which I find very interesting. Of course, I believe this and am experiencing it at our own company, where we have a series of mortgage pool funds. One which just has gone over $20 million. We just deposited close to $1 million this past week for the Pacific Private Money Fund, which has been paying so far just a tick under 8% on a distributed monthly basis, an annualized rate of 8%, compared to what you're getting in the bank. And it doesn't surprise me that the market is still seeing a lot of strength in real estate and real estate-related funds. And when I talk about record amounts going, they're talking about publicly traded, including REITs and other ETFs and funds. It doesn't generally include private placements like the Pacific Private Money Fund, but certainly funds like ours are definitely experiencing quite an influx of capital. And again, the reason it is because we're now 10 years at these near zero savings rates. And yes, if you've been in the stock market since its low back in 2009, you've got a great ride. But right now, you're not seeing a whole lot of yield in stocks and stock-related stuff. So,
all right. So we're going to cut to one last commercial break. When we come back, we're going to have some closing. Yep, you'll finish up. Closing comments. You also have kind of a deal of the week type of thing to bring up.
Absolutely.
All right, so stay with us. You're listening to The Best of Investing. Don't touch that dial. I'm so used to doing a trivia question, but I don't do it until
Yeah.
I get to do 4 of them, not just 3 of them. No.
So you met Christopher Youth and Amanda Taggart.
Oh,
Aren't they
yeah,
adorable?
very nice
So
people.
sweet,
They
I
got
know.
he's got that accent.
Oh, he's charming.
Yeah.
Charming.
Very, very nice.
Sweet guy.
Yeah, we just happened to meet at in fact, that was Mark. You got the loan from Mark.
Oh, yeah, right.
Yeah.
That were the people that I referred him to. I forgot.
Ah,
Yeah.
That was a year
Well,
or so
Amanda
ago.
was the one Christopher's not a title.
okay.
Amanda's the
okay.
one. She's a little powerhouse.
Yeah,
Yeah.
she
I
definitely.
love her. She's like,
She's
somebody like
pregnant
30-something-year-old friend. Yeah, well, she had a baby. I mean,
Yeah.
the baby's like, I don't know, 2 months or something.
Trying to
Oh, that's
think
right.
how
Yeah,
well
that's
we-
right. They just had a baby.
They're adorable. They're so nice.
Yeah, it was a once-a-year Fair Hills party, and so we happened to go and met them for the first time.
I'm glad they went too. So you just kind of didn't recognize them and introduced yourself?
Yeah, just meeting people. Oh, hi, where do you guys live? What do you do? Blah blah
Yeah.
blah. And, oh, private money, man. Yeah, we got a loan from Pacific Private Money.
Right.
Oh, really? And
How'd you met them? Oh my
Yeah,
God, that's great.
Yeah,
We're
just
both
one of
sitting here. I forgot about that. And do you know what Ashley, like Ron Ashley or any of the Ashleys, they own properties on Oakmont? Anyway, I just listed him.
Probably I have to see him to know. I don't know.
You'd never believe it, but I mean, I just left the broker's open from his house, put it on for $3 million. He only bought the house in November just to get a view. Chopped the trees.
An Oakmont?
No, on Highland, but he owned the other Oakmont house that I listed last year.
Oh.
He owns 1,300 pieces of property.
1,300.
You'd love this, a hard money loan for $119 million at 6%.
Uh-huh.
I said, you are bold. And he's 72 years old. I mean, but he was a cosmetic dentist in the. But anyway,
Wait a minute,
his
is
son's
he the one that owns that crazy one?
next to the crazy one.
Oh, next to the crazy one.
Maybe he does own the crazy one. I think it's next to the crazy one.
I think like I was a dentist. It's like it's
Oh, yeah.
it's fake. It's
He's
been
not nice.
abandoned for a long time. It's been abandoned ever since we bought.
Yeah, he's a different character.
Yeah, it's like half remodeled, but then it's.
Maybe it is him because he owns another one too. I mean, but I thought it was across the street.
Yeah,
Anyway,
because we were wondering if like a divorce situation or.
No.
What.
His sons live in the neighborhood,
Oh.
so I thought you might know the sons. Anyway,
Probably.
interesting character. That's all I can say.
1,300 property.
Well, no, you know what he did? He's pretty smart. It's 1,300 doors. Put it that way.
Oh.
So
okay,
buildings.
apartments.
He went Sacramento and Reno.
Oh. Okay, you ready? Welcome back to the best of investing. Edward Brown here, along with Patti Cohen and Mark Hahn. Hey, I switched it up that time. Okay, Mark, you want to finish this up here?
Sure. So I was talking about how a record amount of money has shifted to real estate and real estate related funds, and I did talk a little bit about our own fund at Pacific Private Money, which we call, surprisingly, the Pacific Private Money Fund. And even though past results are not a promise of future results, past performance is not a promise of future results, that is, we have been consistently paying right around 8% on an annualized basis with monthly distributions to our shareholders, and we're now at about $20 million of assets under management. And what that means is we have a portfolio of real estate secured loans made here mostly in secured by Bay Area real estate, and at rates that allow us to, after all fees, after all accruals for the cost of the audit and for fund management, etc., we're paying right around 8% on a distributed basis. And so if you're interested in learning more about how you could qualify for and participate in our fund, please give us a ring or go to our website. But if you want to dial us up, we are here at 415-883-2150. That's 415-883-2150. Or just go to our website at pacificprivatemoney.com. That's pacificprivatemoney.com, and we'd be happy to send you information, prospectus on how we produce those loans, those yields rather, and also the last Wednesday of every month, except for next Wednesday, but typically on the last Wednesday of every month, we do a half-hour to 45-minute presentation, and usually there's anywhere from 10 to 15 people there. We have refreshments, and it's in our office in downtown Novato, where we talk about the fund, and we go into a lot of detail about the safety and security features that you need to know about. So again, for more information about our mortgage pool fund, or if you're an active trust deed investor and like to invest in individual notes, we do still work with a select group of high net worth note investors. And so if you're one of those and you haven't seen a lot of activity from the people you typically buy for, again, give us a ring. We've got a great reputation. And again, just check us out at pacificprivatemoney.com.
Yeah, because you usually keep your loan to values pretty well.
We do well. Right now in the portfolio in our mortgage pool fund has a weighted average loan to value of 55%. So that's a range of about 25% LTV on the low side to about 70% on the high side, with a weighted average of 55%. So we think it's pretty well secured.
That's why you don't get too many foreclosures.
Absolutely. Very low foreclosure rate. Again, you might think you know what a hard money lender is. We're not like that. You asked me if I had a deal of the week, and I don't have a specific deal, but I'll tell you, one of the types of funding that we're doing more often than not right now is helping people to buy a home and compete with cash buyers. They can use one of our loans to close very quickly, to be able to make an offer that is either no or low contingency, meaning there's no financing contingency. You can make an aggressive 10-day, 2-week offer and get your offer accepted because now you don't have a financing contingency. And because our loans have no prepayment penalty, you can pay us back with your conventional loan as quickly as you can. And we've helped a lot of people get into homes in the Bay Area that way. So again, for more information, check us out on our website, pacificprivatemoney.com.
Patty, any last words before we cut out?
How much time do we have?
Got about another minute, right?
Yeah, a little less than a minute.
Well,
Actually, you got 30 seconds.
30 seconds. Well, 30 seconds if you want to know what's happening with Bay Area residential real estate. Call Patti Cohn, 415-722-4842, Pacific Union.
Very good. Okay, here's our thoughts for today. That's the past 30 seconds. A bargain is something you don't need at a price you can't resist. And
That's true.
Mark,
Yes.
here, smell this rag. Does this smell like chloroform to you? Wait, just kidding. Mark? Tune in next week to The Best of Investing. By that time, Mark will have woken up. We're also going to be giving away more free vacations for answering trivia questions. Mark, are you awake yet? Not yet? Okay, don't worry. He will definitely be awake. All right, so again, tune in next week to The Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
Nice.
Okay. That's perfect.
Good.
Oh, he's got to have some fun here.
Indeed.